Everyone, they did it! The Fed's fixed everything. They finally did it. There is a recession, contagion. Oh. I'm Joel Flynn. You're watching the Daily Forkast, July the 28th, 2022. This is what's happening from Asia to the world. So, okay, we've got a 75 basis point hike in US rates. So what's next? What are the risks on the horizon now? Ethereum prices are bouncing as well as it's full steam ahead for the merge. What's happening in Lido and ETH Classic though? And regulators are finally making a move on dodgy goings on in crypto, plus the NFT you've all been waiting for from the Dubai police.
Join thousands of NFT traders who already start their day on CryptoSlam.
All right, Bitcoin's up almost 10% in the last 24 hours after the Fed's rate hike. As of noon Hong Kong time, it was sitting around $23,140. Ethereum prices jumping around 16%, meanwhile, to around $1,650. Stocks also up following that decision. The S&P 500 2.6% higher when it closed on Wednesday. So, is this a sign of correlation between the two? We're going to get the crypto picture in just a second with Igneous Terranus of Bybit. First, though, let's talk about the macro picture and what it means with Justin Donathan from Amber Group. Justin, listen, the Fed's done what it said. Crypto prices up, stocks up. Presumably it's mission accomplished, right? We've hit the bottom in the immortal words of Yaz. The only way is up.
I personally am not sure I agree with that. I think the market is reacting the way you would expect it to react right now, as in we've had a decision, a lot of the uncertainty got cleared, and as you said, the Fed is acting as per plan and things are within expectation, and so investors are willing to take new bets and reinvest money in markets. Now, what we've seen in the previous decision at the latest FOMC meeting was markets rallied, and then prices went down relatively quickly after that, as in people put new bets, but the fundamental situation of the world economy, if you want to see it that way, hasn't really changed, meaning inflation, whether it's peaked or not, remains to be seen, but it's still high. The Fed is still hiking rates. You still have geopolitical tensions, COVID issues, in different areas in the world, supply chain issues, and so on, and a recession potentially coming or actually already there, depending on how you want to look or measure it. And so I'm not sure we're at a point where it's time to be bullish long term.
All right, well, look, there's been a lot of talk about decoupling, about a decorrelation between crypto prices and risk assets. Is this now where we start to see that divergence?
I've been buying into the narrative of a decorrelation between crypto and traditional assets for a long time. It hasn't, meaning the start of the year, that hasn't happened just yet. I don't think it's happening now either. Because everything is so macro driven and investors know that it's so macro driven that they don't look, I think, at Bitcoin or Ethereum in a very different way, unless you're looking at specific news or events that are happening for blockchain, like let's say Ethereum with the merge, or Lido is a staked ETH, or some stable coin that are changing their position. But I would say broadly for the crypto market space, I think it's going to stick with traditional markets for at least several months, while the Fed and central banks are raising rates, and we have there's a bearishness in investor sentiment, so people aren't going for risk assets just right now.
All right, Igneous, let's get more from you now about Ethereum prices. Those were up even more strongly after its latest mainnet test, as well as this Fed decision. We're looking ahead to the merge now in September. There is also, though, some interesting divergence we've seen in Lido between ETH and staked ETH prices, some concern there about a potential dumping on the market. We also know that there's other things happening on the Ethereum blockchain. Can you fill us in?
Ethereum ecosystem is definitely the narrative that's taking hold in the wider cryptocurrency kind of market right now. There's also this interesting kind of like pump, and it's actually it's twice as large in terms of percentage than ETH is in Ethereum Classic, ETC, because it's we're not going to kind of like debate whether or not that narrative has actual merit, but it's definitely a very attractive and very compelling narrative, because once Ethereum truly goes proof of stake, all the proof work hash rate that is currently mining ETH has to go somewhere. So the easiest place for them to go is actually Ethereum Classic.
All right, thanks so much for that, Igneous Terrenis from Bybit, and thanks again to Justin Denethan of Amber Group for his take earlier. If you want to hear more about what's next, what it means for you and your portfolio, like and subscribe to this video. We'll give you all the content you need. Let us know in your comments as well about what's going to happen next and what your big concerns are. One of the big threats investors are watching is what's next, of course, from regulators. Crypto mixers look like they could be in the crosshairs. If the findings of a recent Chainalysis report are anything to go by, there is good reason for that. Usage of mixers has reached all-time highs this year, and both countries and cyber criminals seem to be using them to hide their tracks. Forecast Lachlan Keller reports.
Crypto mixers create a disconnect between the funds which users deposit and what they withdraw by mixing them together at random. There are legitimate reasons for maintaining privacy in this way. However, mixers are also proving very attractive to cybercriminals, as they rarely ask for know your customer information. Chainalysis found that 23% of funds moving to mixers so far this year came from illicit addresses. That's up from 12% last year. And organizations with no nation-state affiliations, including North Korea-associated Lazarus Group, make up significant and growing share of these illicit funds. The 30-day moving average value received by mixers hit an all-time high mid-April, with Chainalysis telling Forecast.
That spike is 100% to do with North Korean hacking. A hacking event isn't a trend, it's a one-off incident. And so, whereas with other types of crime like darknet market or scamming activity, you might see consistent usage over time. Hacking happens in an instant and the laundering happens almost as fast. And so we'll see a sudden increase in mixing, and it won't necessarily be a consistent trend over time.
Brower says that unless something dramatic happens in terms of law enforcement or regulation, the situation will not change.
There's the perceived ability that they can get away with crimes using mixers. Of course, it's not certain that that will happen, but because of just the gravity of the situations and the bad actors involved, I think it's really become almost a no-brainer that law enforcement has to kind of grapple with this issue.
Legal expert Brian Tan told Forecast that it often takes authorities time to catch up, but believes they will.
Law enforcement typically takes some time to unwind and discover the modus operandi of scams. And so for now, they could be still working until law enforcement catches up, and then those tools will be clamped down on. And so it looks like while it's still small, it still works. But as I said, they will be a victim of their own success when it gets too popular. Then you would expect regulation to kick in. Then you'll expect law enforcement to say, hey, this is really impeding law enforcement efforts. And there should be some regulatory oversight over these tools. Then you'll expect to see some kind of clampdown on them.
Brown says that when authorities do catch up, blockchain technology has the capacity to allow for investigation into more than just crimes that have happened recently.
There are tools that make it easier for law enforcement to carry out investigations, and that's why we have crimes from 2016 still getting prosecuted and investigated by law enforcement, because those traces on the blockchain are forever there. So if you carry out an illicit activity, it doesn't go away. If you go and kind of buy a drug or something on the street corner with a cash transfer, there's no evidence of that. But with blockchain, it's forever there.
Tan says that the global money laundering and terrorist financing watchdog, the Financial Action Task Force, or FATF, will be well placed to help get the ball rolling.
The FATF does not have the ability to make law, but they would make very strong recommendations. And should a jurisdiction not follow those rules, they will appear on some form of a blacklist. And that alone would encourage a lot of jurisdictions, especially those who are seeking to be financial hubs, to want to comply to the FATF recommendations. And I think we've seen over the last couple of years, the FATF now makes fairly frequent recommendations, especially on crypto regulation. And the willingness of the financial hubs, Singapore, Hong Kong, Switzerland, to then follow those recommendations would be actually pretty quick these days.
Both agree that bad actors will take advantage of any loopholes they find while they can, but a clampdown on mixers is likely on the horizon. I'm Lachlan Keller. Forecast.
All right, so here's today's takeaway. Obviously, there is still loads of risk on the table for investors in crypto and investors in traditional assets. The Fed, though, seems to think it's doing the right thing and raising interest rates at the right pace, and based on price reaction, the markets seem to broadly agree. But inflation still isn't under control yet. It's not under control in Europe, it's not under control in the United States and elsewhere. Recession, we know, is also coming in some way, shape or form. And there's broader worries about lots of other things right across the world. There's also a lot happening on Ethereum right now, so pay very close attention to this. Mainnet testing is going well. The merge looks like it's on course for September, although we've heard that before. There's also risks as well, though. Staked ETH could be dumped from the likes of Celsius. That could have systemically large holdings and be significant for the blockchain, so keep an eye on the merge. Keep an eye on Lido as well, as Igneous Terranos told us today. Watch out as well for what's happening with ETH Classic, especially as we look beyond September. And finally, the Dubai police might not immediately spring to mind when we talk about NFTs. However, the force claims almost 23 million people registered an interest in its first digital asset collection. That was launched earlier this year. Now, a second set is planned for October. Anyone can sign up to win one of the 150 free tokens they're offering. A police representative said the move is in step with the Dubai government's growing interest in digital assets. Dubai is trying to make itself a new promised land for crypto. Crypto.com and Bybit among the exchanges setting up their offices there. It will be certainly very interesting to see what the take-up of that Dubai Police NFT collection goes on to do. Follow us on Twitter for the latest updates. We're at @forecast_news. Follow me as well, and let me know your thoughts about bear markets, regulation, everything else that's going on right now in crypto at Joel Flynn. That is it for today's Daily Forecast, though. I'll see you next time.